Another round of market madness just hit. Getting old, isn't it? All right, buckle up. The stock market just face planted today, and naturally crypto couldn't help but tumble right alongside it. It's basically a dumpster fire across the board. So what's driving all this madness? Let's break it down together. Oh, and here's something interesting. A chart analyst with a pretty big following posted this morning that XRP whales apparently just unloaded 190 million XRP. Red flag or what? I'll share my thoughts on that, but first, let me get this out of the way real quick. When it comes to finance, I've got zero formal training. Absolutely none. Nothing I'm telling you here counts as financial advice. And seriously, don't let anything I talk about influence whether you buy or sell. That's on you. XRP is at $2.02 right now, with the 24-hour low hitting $1.98. Look at this chart. It's like someone pushed it off a building starting this morning. Bitcoin's not doing any better, at $87,213. Basically the same disaster unfolding here. Took a nosedive this morning, bottomed out at $86,185. As for the crypto fear and greed index, no fresh numbers yet since it only does its thing once a day. We've got about 2.5 hours before the next update drops. Currently parked at 11 out of 100. After today's carnage, I'd bet money it either stays put or sinks even further. Seriously, it's like everything decided to burn down simultaneously. Wherever you look, nothing but red covering your screen. Check this headline from Economic Times. S&P 500 crash. S&P 500 plunges 2.5% in minutes as Nvidia rally fades and Bitcoin crashes. Why US stocks reversed after early gains today? You know what? I've been searching high and low for some bombshell news that would justify the market freaking out like this today. And guess what I found? Pretty much nothing. Yeah, I went down the rabbit hole because this stuff fascinates me. But here's what actually happens. More often than not, people just start hitting buy or sell buttons. Trades pile up and the market swings. Simple as that. Sometimes the momentum just tips too far one way. And honestly, there's no deep conspiracy or dramatic reason behind it. What kills me is how everyone scrambles to pin it on something afterwards. Like they're reverse engineering a story to fit the chaos. I catch this pattern all the time. So today, no smoking gun, no catastrophic event. But hey, since you're probably wondering what excuses people are cooking up, let me walk you through what I managed to dig up. Check this out from the Economic Times. The shutdown-delayed September jobs report showed 119,000 new jobs, stronger than expected. That pushed market odds of a December Federal Reserve rate cut below 40%, hurting growth stocks. Translation: the market's been crossing its fingers for the Fed to slash that federal funds rate. That's the move everyone's betting on. When those jobs numbers pop off stronger than people thought, the Fed basically pumps the brakes on cutting rates, right? And that means there's going to be less liquidity swimming around out there in the economy. The whole global system actually. Yeah, we're zeroing in on the US right now, but let's be real, this stuff doesn't just stay in one place. You're looking at the most massive capital market on the entire damn planet. This is legitimately important stuff. It has real consequences. And trust me, the speculators are all over it. Okay, so there's this extra wrinkle that came up. The Kabasi letter spotted something pretty strange. They noted, US Labor Department said the November and October employment situation will be released on December 16th. Sounds pretty routine at first glance, doesn't it? But here's where things get weird. Right here, look at this. There's what people are now calling an economic data blackout happening. What's that all about? Well, the FOMC, that's the Federal Open Market Committee for anyone keeping score. They've blocked out December 9th and 10th for their meeting. Spans across both days, and data isn't showing up until after they've already wrapped everything up. So there's literally no way for them to bake it into their thinking, which pretty much guarantees they're not cutting rates. The market really doesn't like hearing that. Now, I'll be honest with you, the timeline here doesn't match up perfectly with what we saw go down today. So I'm definitely not claiming this explains the whole story. But if you're hunting for reasons, this is probably your best bet for understanding today's mess. But you want my actual take on this? I really don't think it's going to move the needle that much when we zoom out. Markets tend to work through their issues eventually. We got this news today. Yeah, the clock doesn't quite line up. Yeah, uncertainty makes traders twitchy, but this too shall pass, you know. Markets are going to find their footing again, and when everything settles down, we'll all be okay. Getting worked up about this just doesn't track. That's my 2 cents anyway. Charlie Bolello dropped this post that I gotta show you. Look, if you're panicking right now, just stop for a second, because what we're seeing here, totally normal. Not even close to apocalypse territory. Listen, Bitcoin has crashed before, XRP has crashed before. The whole crypto market has done this dance multiple times. And spoiler alert, it's gonna happen again. Future crashes are coming. That's just how this works. And I'm not sugarcoating it, so here's what Charlie Bolello put out there. He's the chief market strategist at Creative Planning. Super smart guy. He crunched the numbers and said, at $86,000, Bitcoin is now down around 32% from its all-time high of $126,000 in early October. That's the biggest drawdown since April, but not unusual at all, given its historical volatility. Pull up the chart real quick. See that? We already hit a 32% drop earlier this year. Go back to last year, March through August, another 33% nosedive. And hey, remember 2021? Well, technically he's talking about late 2021. But the real bloodbath came in November 22 when FTX imploded. That disaster, a brutal 78% freefall. My point is, these crashes are part of the game. None of this means crypto is dying, because for that to happen, something fundamental has to break. Look at the fundamentals of Bitcoin, XRP, the entire crypto ecosystem. What's actually changed at the core level? Nothing. That's why the market isn't gonna zero. It drops, hangs out in the red for a bit, then climbs back up and boom, we're good again. I've been in this space for more than 8 years at this point. Every wild swing, every heart attack moment, I've lived through all of it. The overall direction, always upward. And look, when we're talking specifically about XRP, the infrastructure surrounding it just keeps expanding. Did you catch what happened today? We got the second spot XRP ETF to ever go live in the United States. Number 2 in the entire country's history. And guess what? It's doing solid numbers right out of the gate. Alright, so James Seifert just shared something pretty wild. This guy works at Bloomberg tracking the whole ETF scene, and he posted, okay, pause for a second, let me paint the picture here. Canary Capital rolled out their XRP ETF, ticker symbol XRPC, and it became the biggest ETF launch of 2025. Not just among crypto products, not just in the financial sector, I mean across every single category. We had about 900 different ETFs debut in the US this year, and Canary snatched the crown. But wait, it gets better. Canary Capital isn't some giant powerhouse. They're actually pretty small. Bitwise, on the other hand, massive, doesn't even cover it. We're looking at something like 30 times the size. Total heavyweight in the industry. Now look, Canary definitely grabbed some extra attention by going first. Being the early bird has its perks, no question. And Bitwise, man, their timing couldn't have been worse. They picked a day when stocks were crashing and crypto was taking a beating. Launch this thing when markets are steady or climbing, and we'd probably be looking at way bigger numbers. But even with the market looking like a dumpster fire, money kept pouring in. That's what catches my attention. Here's my point. The big players, they're playing the long game. None of this short-term chaos is keeping them up at night. Trust me on this one. They're not sweating any of it, not even close. Matt Hogan just posted something. He's the CIO over at Bitwise, and this morning he dropped this. Very excited to launch the Bitwise XRP ETF. XRP. What a journey for this asset in this community. Excited to see what's next. Look, if you're building anything in the XRP ecosystem right now, using XRP for whatever project you've got going, here's what you need to remember. Market dips don't change the fundamentals. They just don't go back through history. Look at every single time the market tanked in the past 13 years since XRP launched, and there have been plenty of those moments, right? Including that whole SEC lawsuit drama. But you know what? The builders never stopped building. They kept going. And guess what happened? The fundamentals for XRP just got stronger and stronger. And that's exactly what's happening right now. It's so obvious when you step back and look at it. I mean, think about this for a second. On a day when the market's pulling back, we still get another XRP ETF, a spot ETF launching. Are you kidding me? This is literally the dream scenario. Seriously, imagine going back just a few years, when the SEC was coming after Ripple and basically attacking every XRP holder on the planet. Could you have imagined someone telling you back then, hey, don't worry, in a few years you'll have spot ETFs live? You'd